Day 18 of the bootcamp, and I must confess, I think I'm a little bit more excited than you guys for this one. Today we're going to talk about the much anticipated entries. Now, of course, in trading there's a lot of different variables, but it all comes down to where do you enter? Where do you enter the market? You might be telling me, hey MC, I can look at structure, I can analyze the charts. I have a fear of entering. I'm afraid of knowing where to enter, and that's what we're going to dive into today. But I also know that there's a trust factor at play, and if you're either skeptical about me, which I cannot help you with that. You need to come to your own conclusion whether it's legit or not. Or you're telling yourself, okay, MC, you're doing it correct, but how can I do it correct? And I like to show you two case studies. I'm going to pop it onto the screen. The first case study. Now, when a member signs up to my academy, they get a one-on-one. And with these one-on-ones, I really dive deep into their personal stories, what they're struggling with trading, and how I can help them. And these particular two cases, they were struggling with entries. So the first case, of course, the man was he could analyze the charts, he could understand the analysis, but he did not know when to enter. And then after just one-on-one with him, I sat down with him, we discussed his mistakes, and we also discussed what he can improve on with a detailed, thorough analysis and spreadsheet. And yeah, man, the proof is in the pudding. Fourth payout on the way. The second case study, this one hits a little bit deeper than I thought, and I love to kick off this call that way because that's everyday life. I mean, this man was on his way to attempt suicide, is on his way to give up. And then after one-on-one call with him, we did not just discuss entries. I obviously tried to understand his scenario, what's going on in life, because I like to be there for you guys, you know. I don't only want to just jump into the charts. If you want to just talk charts, we can most definitely do that. I mean, the name is MadCharts for a reason, but I also love to get to know you guys and understand, really put some time in with my members and understand what's going on. Nonetheless, after we discussed those personal aspects, we went through the entries, and this user in particular was struggling how to jump down from the higher time frame to the lower time frame. And I think we already mentioned it, but I just jumped deeper into the candlestick maturity, and I mean, the rest is history. It's pretty much goes without saying. I think he's on his way to making his sixth withdrawal now with a prop firm. I'm speaking under correction, but he's doing pretty damn good. And there's a lot of case studies like this, but the trust factor has to come into play, and you need to decide whether you're going to really put some time into this or you're just going to watch another YouTube video, as I always say, folks. And there's two pillars to making a trade, okay? You can do the analysis, you can look at structure, you can look at the roof and the floor, and you can look at all of these things, but it all comes down to, at the end of the day, at the entries and the exits. And no bullshit right now, but I can confidently say I'm super proud of my entries, but the thing I'm most proud of is putting it all together. And I really have the confidence to say that that is what sets me apart, okay? It's my entries and my exits and putting them all together. That's really what sets me apart. And I've been challenged multiple times, and I've been taking on those challenges. I've been challenging myself, and man, the proof is in the pudding at the end of the day. So yeah, once again, just choose whether you're going to listen to this or not. It's up to you. But at the end of the day, let's dive into the charts and you guys can understand what I'm looking at. So the first thing that I want to say is that I'm not really going to focus so much on the structure and analysis because we already did that. I really want to pay attention to our entry methods. And what better way than to explain it with a recent trade that I took. So we already explained this trade criteria, but I want to talk about the trade that happened on 29th of July 2025. Now, I'm not going to talk so much about structure once again. I really just want to dive into confluence, and that's the topic for the day, is confluence. Now, confluence is a word in trading whereas you have to look at a number of things, and those number of things compiled together will create an overall entry for you. You have to set up this kind of latches on with our previous bootcamp video where you had to do some data collection. Now this is a pivotal point in your data collection. You need to go and create the best confluences that you like, not that I like. You have to resonate with yourself as a trader. You need to learn what works for you. I can only provide the tools. You need to decide what's your strong arm, what's your best type of work to do in. But at the end of the day, I cannot force you to do anything. I'm only sharing what works for me. So you need to go and check which confluence areas is really working for you. So confluence is by looking at, we already discussed, we want to look inside of the house. So when we look inside of the house, we want to check, maybe there's a horizontal line, maybe there's an order block. I don't trade order blocks, I'm just mentioning it. Maybe there's a trend line. Whatever there is has to give you confidence. So without confluence, you will not have confidence, okay? We need to have as much confluence to have more confidence. As simple as that, okay? Do not think that the more confluences you have, contradictory to what I just said, but don't think the more confluence you have, the better your criteria for entering a trade, or the better the possibilities of the trade going in your favor. No. There's always a probability factor, okay? You can set up your rules, such as, yeah, I do not trade before news events, or I have to wait for a break of structure on the 5-minute, or I have to wait for the mad block on indices. You can set up your rules, but at the end of the day, there's always a probability that the market might reverse against you, because this is a $6 to $7 trillion market per day. So there's a lot of things going on, okay? You need to understand that your idea right here is not to control the market. Your idea is to jump in, follow your systematic approach to make money, withdraw that money, and go and live the life that you and I, we both know that you deserve. That's the end of it, okay? As simple as that. No funny stories, no funny languages. That's literally it with trading. And a lot of people overcomplicate it because they jump in front of the camera, they make these funny bullshit videos about my entry is the best, your entry sucks, my entry is the best, that guy's entry sucks. Okay, we trade smart money concepts. Let's be better than those people. That's not what this video is all about, okay? Today's video, I'm going to show you what works for me, and hopefully a lot of you learn from this. So back to the point. We want to look at what's inside of the house. Now, key criteria for me, we look at 9 things. 9 confluence factors. Now, it might be a lot, it might be a little. I don't really care about your opinion. That's what works for me and works for thousands of other people. So 9 things. Okay, today I'm going to explain 3 or 4 of them. If you're a new trader, you can probably just put 2 and 2 together and understand that there's more things that you need to add for confluence, which aka adds to your confidence. But if you're a little bit of a seasoned trader, then you might possibly take what I taught you or what I teach you and combine it into how you're currently trading, and maybe, just maybe, you found something beautiful in the market. So we already got our roof, we already got our floor. So the first thing I like to look at for confluence is, are we above or are we below our equilibrium? Okay. Now in this particular trade, I know this is cherry picking. I'm cherry picking trades right now, but that's okay. In the other videos we were going to talk about exits, I'm going to talk about bad trades as well. So right now we touched the equilibrium and we touched the high of Asia session. That alone is a confluence, okay? That gives me confidence to say we rejected the equilibrium. That's the first confluence that we have, because it acts as something that gives me confidence. If you're an athlete or you're a very good businessman and you know which deals to call out and you see a specific characteristic in those deals, that's confluence, guys. I mean, it goes without saying, if you're an athlete and you see your opponent is weaker on his back legs and you're stronger with the driving force on your front legs, that's confluence. You're going to use that weak point in your favor. Please do not overthink it. Don't get confused by this. Confluence is just something that adds to your confidence. And you cannot have an entry without confluence. My rule of thumb is at least have 5 confluence levels or confluence criteria before you take an entry. Because remember, guys, the goal here is not to trade like a machine gunner. The goal here is to trade like a sniper. So you need to find your confluence and have as many as stacked in your favor. And if, let's say, if 5 does not line up, you don't take that trade, folks, because tomorrow is another day. Next week is another week. More trades will come. Stop thinking that this trade right here is going to change your life, and start thinking like, I'm going to change my life to look at confluences, and then this trade is just going to boost me up further than I currently am. So, equilibrium touch, high of Asia session touch, and then we got our exhaustion area right here. That's my second confluence. We got equilibrium and we got an exhaustion. Those two combined, I have an exhaustion on my equilibrium and the market is rejecting both of them, okay? Then I look at a few other things, but I want to touch base on the lower time frames. So the only time I will drop down to the lower time frames, guys, is if I want more data. Don't overthink it. I'm only dropping more lower time frames because I want more data. That's it. Don't let anybody sell you any funny business, because the market is fractal. What happens on the lower time frames will happen on the higher time frames, and then vice versa. So I will only drop down to lower time frame to see if we have a break of structure, to see if we have a transition, to see if there's maybe a fake out coming with candlestick maturity that we already spoke about. So I'm on a 30-minute right now, and I can see we have an exhaustion on the 30-minute. So I'm going to do one of two things. On the 15-minute right now, I want to see if that exhaustion area still holds, or maybe it was a candlestick with no wick to the bottom, or I just want to see how it formed on the lower time frame. Second thing I want to do is I want to see maybe we had a bearish engulfing on the 15-minute. That would be great. And then combining that with no wick on the 30-minute, you can see I'm playing these two time frames against each other. Let me repeat. So if I have a 30-minute right here, I have a 30-minute bullish candlestick popping back into that exhaustion area, but I see we have no wick to the downside. That's indicating that there's a lot of downside pressure. The market is trying to manipulate us, take that with a pinch of salt, pushing the market up, and then everybody wants to adamantly buy, or they want to impulse buy on that, but not us. We see we have no wick. If there's no wick to the downside, that means one of two things. If it's with the trend, the market's coming back to fill that wick, or if it's against the trend, that means there's no range. As I always say, guys, it's always in context. You always have to create context for yourself. I'm actually starting to realize a lot of these words sound the same. It's context, confidence, confluence, probabilities. So, yeah, anyways, that was a dad joke. Let's go back to the 15-minute time frame. So on the 15-minute time frame, I can once again see, now I can confirm my thesis. We have no wick to a downside. But on the 15-minute, the picture seems a little bit more clearer, because I can see we have the market pushing back down during London session, then pushing back up. So the minute this one candle pushed back up into that exhaustion area with the equilibrium touch, I can see the 15-minute had no rejection whatsoever to the downside. I mean, we pushed up, then pushed back down. But I'm still not convinced right here, because it doesn't give me enough. It gives okay information, but it doesn't give me enough. So I want to see on the 5-minute, maybe on the 5-minute I can see more data, such as a low being formed with that the bearish candlestick on the 15-minute, the market pushing back up and then breaking that low, or I don't know. Let's drop down to the 5-minute and see what's going on there. There we go, folks. We can see we had a gap down on the 5-minute, which is pretty much, I wouldn't say irrelevant, but we knew it was fundamental. So we don't really care about that. That's nothing part of our entry. We already depicted our level on the higher time frame. So that's finished business. We don't want any part in that now. What I want part in is the actual entry. So I'll only go down to a 5-minute if I want to spot the candlestick. Okay, I want to look at maybe let's say 3 or 4 candlesticks. 2 candlesticks before, 2 candlesticks after. That's it. That's all I want to look at. I don't want to look at levels at the top, levels at the bottom. No, I really do not do any analysis on the 5-minute except draw one line or maybe 2 lines to indicate a break of structure or a high point or a low point. That's it. On the 5-minute, the picture just becomes clearer and clearer. Point number 1 that we see an engulfing candle on the 5-minute, which pretty much swallowed in this candlestick variation. Second thing that I saw is we saw a support area being formed. A support area, in my opinion, is when we get a bearish and a bullish candle. That's a support area. But let's say MC, I'm a little bit uncertain about this area right now. Then I'll tell you, okay, let's go back to high time frame and see what happened there. So the level is 44921. Let's start at the 30-minute and check. Just check for our own peace of mind what's going on at that particular level. At that level, we can see that it was still in the middle of the candlestick formation of the market going back down. So there's no 30-minute being closed yet. Let's drop down to a 50-minute and see if we get anything clearer. And there we have it, folks. I'm looking at this line right here, okay, this one. So This indicated that we had two bearish candlesticks pointing lower. So what I will do in a time like this, I'll just move this right up here. Remember when I said the market is fractal, this might be obvious, but to a lot of people it's not obvious, so just bear with me. And then we got the candle closure below. Pay attention to this. This is my third confluence right here. This confirms my thesis of the equilibrium and the exhaustion area, but I'm still not in the trade right here. I wanted to confirm the confirmation. So always confirm your confirmation, okay? Extra confirm. And it's not like you're trading like a little girl or something. It's not like you're trading like a scary cat. It's like you're trading to be precise. You're trading like a sniper. You're trading with active precision. So at this point, let's go down to a 5-minute once again. And I just want to see if this confirms. And we can see, okay, market came back down, pushed back up. And the minute it came down low and it broke this low right here, I would have entered. And here's a cool thing, okay, about confirming on the 5-minute is you can have a 5-minute stop. I can see on the 5-minute that this is technically a lower high, so stops above that area right there, and then an impulse, market pushing back down. I want you guys to pay real close attention to this. I'm not doing any analysis further on the 5-minute. Nothing. I'm not looking at exhaustion areas. I'm not looking at anything else. I already got my 3 confluence areas. I got my equilibrium touch, got my exhaustion area, and I got the rejection of that. So what's my 4th confluence going to be right here, folks? Remember, taking everything into consideration. We have the higher time frame pushing bearish. We have maybe a false break reversal, red setup day. That in itself can be seen as confluence, okay? It depends on how you look at it. I see it as structure, but it's all up to you. I do not see it as confluence, but it all acts together as painting my overall idea to get an entry. So right now, I want to look at maybe stacking some more confluence in my favor. And this is the 4th thing that I do, is I look at higher time frame candlestick formations. I already looked at my entry on the 5-minute, but now I want to make sure, I want to confirm my confirmation. So I will start at the 30-minute because that's my 2 entry time frames, is the 30-minute and the 15-minute. And once again, I can see right here. We have this low right here. We have a bearish candle, bearish candle. Is this convincing? Not to me, it's not. Might be to you, but to me it's not, because this candlestick right here at 8:30 did not close below a bullish candlestick as a confluence. So let's go to a 15-minute time frame, and right here I got my confluence. I would say this is a 2-part confluence. The first thing I got is this massive bearish rejection candle right here, closing with this candle closing below this low right here. And then of course, but this is a little bit delayed, but this just confirmed my thesis that I'm going to make some money today, is this candle right here closing below this bullish candlestick. Then I know, okay, that gap has been filled. We have created a wick down here. So that's what really piqued my interest at that point, because I knew now that there's no bullish pressure forming at the top. So it is really just as easy as that. Equilibrium touch, exhaustion area touch, confirm the exhaustion with a closure below or closure above if you're buying, and then look at higher time frame candlesticks. I only looked at the 5-minute time frame. I would not say I ever look at the 1-minute. Maybe if I'm in a trade and I have a big position on, I want to see how it's forming, but we'll talk about that in exits. So in the 5-minute, I want to look at a break-off structure. So let's say that's 5 confluence areas. Remember I said I look at a total of 9. Now can you imagine looking at so many confluences, how much that piques my confidence? Because I look at the higher time frame, I look at the lower time frame, and I take everything in together, and I understand that it creates one beautiful picture. Because the biggest mistake a lot of traders make is they want to look at an order block, and then they maybe want to look at an exhaustion area. It's the same thing, bro. Or you want to look at a trend line, and then you want to look at, I don't know, maybe another angle line. But you have to be careful by not looking at the same thing that creates the same sense of idea. For example, an horizontal line. If you already got a support line, you don't need to look at equilibrium. Equilibrium obviously trumps support line because it gives a lot more context to that area or to that region. So That's why I'm trading what I'm trading. I found certain things that is more clearer or carries more weight, and I use that in my advantage. So homework for today, folks. I need you guys to look at 3 of your best entries for the past week with the knowledge that you got from this bootcamp so far. Look at the entries and follow this exact step-by-step approach. And then tomorrow we're going to talk about exits. I hope you guys are holding on to your seats because it's going to be a crazy one. Love you guys.